All right, in this explainer, we are diving into a really personal financial case study. It's all about a family trying to weigh their global ambitions against their deepest core values. A situation that gets right to the heart of what money is really for.
So let's just get right to the heart of it. It's a dilemma that so many successful global families are facing. How do you balance a super sophisticated financial strategy with a really simple life philosophy? I mean, this is the classic head versus heart problem, just played out across international bank accounts. Now, the source for this is pretty cool. It's an actual letter from a family in Taiwan writing to a financial advisor. They're trying to figure out this really complex financial picture. And, well, their questions end up revealing a much deeper story. So here's the breakdown. We've got a successful couple in Taiwan. They have a 7-year-old kid. Now, half of their assets are in US dollars, and they have this significant income, 15 grand a month, also coming in US dollars. And they're thinking, their child might study abroad someday. So it all leads to this one huge question. What in the world do we do with all this US currency? Do we bring it home to Taiwan, or do we invest it over in the US? But see, this is where it gets really interesting. Right underneath that big financial question is this incredibly powerful core value. They say it so plainly. For us, family unity comes first. So unlike a lot of their peers, they've absolutely refused to separate the family for an overseas education. And that creates this fascinating tension with their strategy of holding half their money offshore.
So, faced with this dilemma, what did the financial advisor say? Well, the response was incredibly direct, and honestly, it cuts against so much of the conventional wisdom you hear about global diversification. For a lot of people, it might even feel a little counterintuitive.
The first piece of advice? It was completely 100% unambiguous. Bring all the money home. Not some of it, not half of it, all of it. No hedging, no splitting, just a full-on consolidation right back into their home currency.
And then, part 2 was just as clear. Consolidate all the investments into the local market, specifically into a plan built around a local ETF, which, is just an exchange-traded fund that tracks a bunch of local stocks. Now, this immediately raises a huge question, right? In our globalized world, why on earth would you put all your eggs in one geographical basket? So you have to be asking, how did the advisor justify such a bold strategy? Well, the logic wasn't based on spreadsheets and numbers alone. No, it started with a really powerful philosophical foundation that spoke directly to the family's own stated values. In this quote, wow, it just reframes the entire problem. All of a sudden, the goal isn't maximizing your returns or hedging your currency risk. No, the primary goal, the real bottom line, is maximizing your family's well-being and the time you have together. Everything else? It's secondary. The advisor even uses this really powerful economic concept here, external diseconomy. It's the idea that a move that looks smart on paper, like, say, splitting the family across continents for an educational advantage, carries these immense hidden costs that never, ever show up on a balance sheet. We're talking about the emotional strain, the lost memories, the relational friction, all of it. But look, this wasn't all just about philosophy and feelings. The advice is backed up by a very practical, very confident assessment of Taiwan's own financial environment. Basically, the advisor is arguing that this need to go offshore, it's often way overstated. The argument here is that this whole perceived need to hold assets offshore, for a family in this position, it's pretty much a myth. The advisor points out that Taiwan's system is super flexible, it's developed, and it's powerful enough to support everything the family needs, even if they do decide to move or send their child abroad later on. And this right here is a perfect illustration of that point. Tools like stock pledges are key. What they mean is that you don't have to sell off your core assets just to get cash to fund your life. Your investments can stay put, consolidated and growing in your home market, while you access cash to live anywhere in the world. It totally separates the location of your assets from the location of your life. Pretty brilliant. So you can see what's happening, right? This advice is a direct challenge to so much conventional wisdom. The advisor is basically arguing that preparing for a future that might not even happen, well, it just creates a ton of unnecessary complexity and risk right now. Instead, the focus should be on building a strong, simple, and unified present. So all of this advice, the philosophical side and the practical side, it all boils down to one powerful, super memorable guiding principle. It's a phrase that ties the family's deepest values directly into their financial strategy. And here it is. This is the core takeaway, the unscattered principle. People don't separate, money doesn't scatter. It's just such a beautifully simple idea. Align your assets with your life. If your main goal is to keep your family together, then you should also keep your finances consolidated, simplified, and working together, not scattered all over the globe, preparing for a separation you don't even want.
And that leaves us with a final, kind of provocative question that I think challenges all of us. When you look at your own financial plan, are you building a fortress for a dozen different possible futures? Or are you using your resources to build the best, most fulfilling life you possibly can, right here, right now? It's definitely a question worth asking.